morning, Stock Twist Nation. It is Wednesday, October 8th, 2025. This is the Daily Rip Live. I'm Katy Perry, joined by Shay Boloor. Go Yankees. Did you see that, Shay? Did you see Aaron Judge? The bat flip. We're back. We're so back.
That was huge. Like last time I saw it was like they're down 5-1 or 6-1. I was like, geez, it's gonna be a sweep. And then all of a sudden they're up 9-6.
Not gonna lie, I started watching Love is Blind when we were down by five runs. I don't know if you've seen this season. Shy.
I'm considering seeing it on a very long flight that I have to go on in a couple weeks.
Can I give one spoiler that's not really a spoiler?
What?
They literally cast a blind person on Love is Blind. Twist, right? Yeah. Or she's going blind. She's not there yet.
I heard about that. Like she's a chance she can go blind.
Yeah. I don't know if you guys are watching. Please DM me or X post if you're watching. I have no one to talk about this too, but something is in the air or the water in Colorado. Things are not okay. Specifically Dillon, which is where a few of them are from. No shade to anyone from Dillon, but oh my God, it is the weirdest group of people. But Shy, yeah, you guys got to fire this up on the flight. It's just, it's so good. Also, I stopped by Starbucks as promised, and I got a protein. It's a cold brew with banana protein cold foam. I haven't tried it yet, so.
Banana cold brew, interesting.
Yeah, I don't like that.
Chunky monkey? Is it like a little chunky?
There's definitely a texture to it that I don't appreciate. But the taste, yeah, I'll try again. Starbucks, if you'd like to give me a gift card, it's just not. It tastes like chemical, it tastes like protein. I don't know. And one of the options, Shy, was pea protein, and I was like, who would put pea protein in? Like people are just, I don't know, man. I'm gonna drink it because it's here. But yeah, you can see the cold foam is like beginning to mix, but the powder's separating. I don't know. Let's talk about other things as I choke this down. What about this IBM, or sorry, not IBM, this, IBM Anthropic deal. We talked yesterday, Shy, about Deloitte's or Accenture's big deal with Anthropic. There's another one, IBM pushing harder, unveiling tools to help enterprises move from experiments to impact. Another big announcement there. They announced this at Tech Exchange 2025, and they announced these enhancements to their WatsonX Orchestrate. The upgrades are targeting their biggest enterprise friction points, which they say are governance, hybrid cloud complexity, and developer productivity. Another one of these companies, Shy, just leaning into a more AI forward, more innovative company to stay ahead of the curve and relevant. Do you think that the focus on the AI plumbing at these companies, is that enough to give them an edge over these pure play firms? Or do you think they're gonna be rendered obsolete at some point?
No, I mean IBM will not be obsolete. Their moat in the mainframe business is just impenetrable. Like it just really is. You can't break it. Their consulting business is doing really well. Their only Achilles heel is their software side of their. I think it's Red Hat. I'm blanking. I always blank on the name of it, but it's just not doing as well as it should be, and I think that's what penalized them a bit last earnings report. But yeah, I mean, the AI renaissance is real. Like it's not just for AI native customers. Like a lot of people assume that's where we want to be, the open AIs of the world, Palantirs of the world. It's actually for a lot of these businesses who've been around for decades, who've held their moats, that are going to see a second win now that AI is going to provide them. And IBM is one of them. You're seeing Dell being the other name. You're seeing Cisco, like all these names, like Grandpa's bucket is doing really well, and they're going to continue because they have a massive lever to pull. That's huge. So I think there is avenues to get AI exposure with companies that actually have real earnings. Then I don't know, having to at this stage of where we're at right now in this rally, like buying companies with 100 times price of sales or 200 times free cash flow. Like you need to ask yourself, what is the risk and reward? Like a lot of my subscribers ask me, like, should I just copy your portfolio right now? I'm like, no, like 2 years ago, maybe. Now, I mean, Palantir's at 180, Cloudflare 220, IonQ's 85. I think it's 80 now. Rocket Lab 65. Like these names have like essentially 10x. This is not the time to close your eyes and get in. Like you have to get a little more creative and patience. You need to be patient because there's going to be a pullback eventually. Right now, it's just very frothy in the short term. I think the biggest advice I can say, let me pull it up right now. I made a post about it. Someone said it on the video. I was like, oh man, this is so relative to what today's environment is. Okay. Markets almost always recognize the what of a breakthrough, AI, drone, space, quantum, nuclear. They always miss the when. They bid up too early, then sell off once their hands get a little shaky from any type of pullback before the real decade-long run occurs.
Yep.
Maybe this happened in 2022 when everything got frothy. Everyone got their hands shaken out a bit, and now every name 10x, but it happened. So be cautious, be prepared. Don't blind copy someone who's performed really well past couple of years.
Yeah. So these ones that you've held, Shy, that are 10x, are you cutting positions on some to free up cash for new investments, or because you believe it's a 10-year, you're holding on to kind of every share you've got?
So I'm fortunate enough to be in a position where I can put 2% cash every month in my portfolio. So like if I don't add anything, like I haven't added anything really in months, the position balloons, cash position is like now 12 or 14%.
Yep.
Now all of a sudden, like I don't have to be bearish and trim my stocks to raise the cash to have that dry powder for a pullback. Now I have the cash by itself. So I think it's really specific to what kind of investor you are and what kind of position you're in. If you don't have the luxury of being able to, time provides you the cash position, I think trimming 15 to 20% is healthy right now. It absolutely is, because worst case scenario, you are right. The market pulls back. You lose a third of your portfolio value, but you have dry powder to capitalize on it because this is a decade-long run. Best case scenario, you're sitting on cash position like I am. Your portfolio continues to compound. That's what's happening right now. I'm acting like this like spoiled little brat because my portfolio is up so much this year because I'm just sitting on the biggest cash position I've had for a while. But zoom out, I'm just being a brat. Like I'm winning still. But I just want, like, it's a win-win if you do it that way.
Yeah, it is, because if there's a drawdown, you're ready. You're chomping at the bit to put that cash back in. If there's not, the other side of it's continuing to just mint money. So it's good to be shy. I want to talk about the AI trade a bit and the tsunami, as you say, because there was an article that came out citing a Big Short investor, Steve Eisman, and he was talking about how the U.S. economy's growth story, his view is it's more illusion than reality. And I'm curious what you think, Shy, because he's saying basically that if you strip out, the hundreds of billions of dollars in AI infrastructure spending, the Google, Amazon, Microsoft, if you take that away, the economy is barely growing. And so he's kind of worried, I think, or concerned about this reliance on AI. But when you talk about it, it's not just one trend over here. It's something that's infused, embedded into literally everything. And so there's somewhat of a difference there. But it's not this one-off thing that can just like disappear. What do you think about, there was also an article in the Financial Times yesterday, I think I brought up, U.S. is just the U.S. economy is being synonymous with AI. Is that a good thing or is that a bad thing?
I think it's first off, these geezers are just like, they hate this rally. I don't know why they just do.
They don't want anyone else to be rich. If you already got your yacht, you don't want, Shy to get a yacht.
Well,
you want you to stay on YouTube where you belong.
That comment's ridiculous. It's like Amazon and Google were starting to really catch heat in the early 2000s. It's like saying a lot of the earnings are on these online marketplaces. Like I'm kind of worried because the brick and mortars are, that's the heart of America, and like that's struggling. So this is all inflated. That's how revolutions happen. Like they change every part of the world. So when you're going through a once in a generation theme like AI, of course, everyone's resources will go towards AI, and a lot of the margins that are being pulled is in AI. So Yeah, you're saying that that person's stating the obvious, sure, but it would be a concern if AI was a fad. It's not.
Yeah.
It's real and it's changing and it's going to be permanent. So that doesn't matter if all the earnings right now is towards these AI names. I do think in a couple years, like if the breadth doesn't widen out outside the hyperscalers, for example, of being the ones pulling the lever, then I do think there is somewhat of a caution on is this too top heavy? But
Mm-hmm.
at this stage, like it's the same people who claimed in 2022, like the internet .com bubble is happening, it's going to be permanent. It's like, no, that was not the case. It was just, it's exhausting seeing these older generations that used to have bigger weights in the equity markets say these kind of statements because they have some kind of reason on why they're saying it, maybe, but
They
it
gotta
doesn't
say
make
something
sense.
crazy to get, booked on TV and stuff. You
Well,
gotta,
they probably have to justify their 15% of year returns to their clients, so they have to
yeah.
say something like, "Guys, it's inflated." Like they just
Yeah.
missed the boat. That's it.
Yeah. Everyone's got ulterior motives. Let's talk about Tesla for a second because we had the teaser come out over the weekend and they dropped the news, and I think it was in line, Shy, with what you were expecting. They're cutting prices again, rolling out cheaper versions of the Model Y and Model 3. Thoughts on this? I mean, you kind of saw this coming and you were like, yeah, okay. Any take on what they announced?
It wasn't going to be needle moving. I had a feeling. I just
Why
think
put out a
that
video? Why put out a video though? I don't get that. Apple does
it,
the same thing. They're like, ooh, like, and then they're like, it's a third camera. And you're like, okay. You know what I mean? What was the point of the video?
there's 0 point. I actually think they fumbled the ball on the marketing elements of that. But also, I also think that LeBron fumbled the ball. Do you remember? Like, I don't know if you saw LeBron had this like big decision. It's supposed to be revealed yesterday.
Yeah.
Everyone thought he was going to retire. The Laker tickets all of a sudden 10x overnight. People were buying Laker tickets thinking it was a finale tour, but really it was just an advertisement for some beer
For Hennessy.
for Hennessy. So now all those people were like, I have to go watch LeBron's last like
Oh my
year.
God.
They're holding the bag. So I digress a bit, but the
Yeah.
Tesla, I mean, these marketing companies always want hype. I think they probably underestimated how lack of the lack of substance in the actual reveal. End of the day, the cars are just going to be a cash engine right now for Tesla in the long run for autonomy and robotics. I don't think this moves the needle. Maybe this gets people to downgrade for their Model Ys to get these kind of these cars. I think they decreased the price like $5,000 or $7,000
Yeah.
from what people anticipated, but that hype video, like, or maybe it's just the times like we're in, like any kind of
Everything is a hype.
breadcrumb.
I know.
Yeah,
Don't even get me going on the hype video. Every startup that raises money needs a cinematic hype video. The Cluely guys started it. Haven't heard from them for a bit. But it's everyone needs a video. I get it. But if you're Tesla and you put out like a big teaser, like it better be good. I don't know. But the stock fell over 4% on the news. Maybe people were expecting the Transformers that I was hoping for. But one interesting thing is these are stripped down a little bit. So they have shorter ranges, fewer features, and analysts are saying it's less about innovation, more about cost cutting, which seems like they're not denying that. They're saying we want to make these more affordable. And I thought this was interesting because the Amazon backed company Slate, I remember we talked about those cool trucks. I'm on the waiting list for one, even though I don't really drive. Those are like the EVs that are like totally stripped down. It's like basically an EV like buggy or whatever. Very cool looking. So you have the very souped up, innovative, the Cybertruck, and then I think there's a push to kind of normalize these cheaper versions. The new Model Y is starting at under 40K, the Model 3 under 37,000. The Slate pickup truck is 25K before you start adding all the customizations and the stuff. So we'll see there. Let's turn to some. I saw a headline and it got me a little worried this morning, Shy. Domino's is doing a rebrand. And we all know what happens when a company that's beloved gets rebranded. They are, well, I'm sorry, they're calling it a brand refresh. In the marketing world, a rebrand is like, don't say rebrand, something's wrong. A refresh means, you just went to Beverly Hills, you got a little zhuzh, So they're basically unveiling bolder reds and blues, black and gold boxes, and a thicker font. So I guess it isn't that big of a deal. Again, I don't know why they announced it, but they also have a new jingle by Shabuzi. I'm a big Shabuzi fan. I don't know. I don't get that. But they are, of course, in a position of strength. Domino's is one of my favorite stocks to follow, just like historically. Like if you look at Domino's stock over the last, whatever, 10 years. Uh, so hopefully people don't freak out. I don't think they will. They didn't change anything materially, but we will see. They're, of course, in a position of strength. Their sales were up 6% in 2024 and another 5% the first half of this year. People like their Domino's. I'm a Papa John's gal. I don't know. What do you go for, Shy, if you order pizza?
Oh my God, LA's made me so bougie with it. It's all these like Melrose, like Nancy Silverton or Silverman.
What is
Oh my God, I
that?
should know that. It's like this fancy chef. She's known for making bread. I love
Okay.
sourdough pizza. It's like one of my. It's so good. Yes, I know it's like a $35 pizza. That's like 5 slices, I guess.
Yeah.
But yeah, I'm definitely bouged up a bit. If you're in Angelino, you know, pizza. And when I go to New York, that's why my biggest hot take on New York is just like I don't really love the pizza because it makes me feel awful afterwards. It's
Oh,
just
yeah.
greasy and all that stuff.
It just
Uh,
sits.
It just sits. But for Domino's, like I mean, I don't know. There's gonna be robots delivering your pizza to you eventually. So like maybe that's a margin lever.
Yeah, I think it's different than Cracker Barrel is like an experience. Like people have like emotional ties to like the store. I saw an Jeremy Newsom, who comes on the show here and there. He took a little road trip to Cracker Barrel and posted videos from it, which I thought was hilarious. But he was in a restaurant and like everything was kind of normal and back to normal, but the menus had clearly been reprinted with the new logo. And I'm like, oh, they're still gonna like be clawing that back. But yeah, I don't know. I'm in New York and there's good pizza around, but I like a Papa John's. I like the crust. I gotta say. Um, I don't know how I'm gonna transition to the next story from that, but let's talk about gold for a second because gold is obviously something that's been trending for investors. The rally is continuing. And analysts are saying it could tell a bigger story about trust in America's financial system. Of course, we're on day 8 of the shutdown. And the precious metal hit a record above 4,000 and now it's up 51% this year. The noteworthy thing is beyond just the price per ounce is the speed of its rise. So I think it was in after the financial crisis was when it crossed 1,000 for the first time, and it obviously took a bit to get higher than that. But 51% since the spring is crazy, and this is the best run since 1979, and that was a really a marquee year for inflation and global instability. So analysts saying investors are turning to gold as confidence in U.S. institutions and the dollar erodes amid trade wars, prolonged shutdown. Thoughts on? I mean, gold is not in your gold is not in your growth portfolio, Shy. But like, what are you hearing? It's interesting that this just keeps rising because we've been talking about gold. It feels like all summer, and it started obviously in April. But any hot takes on gold?
I mean, we are just an agent of chaos as a society, and gold is going to be the biggest beneficiary of that. And if
Yeah.
you think that that train is going to slow down of this agent of chaos, like you're delusional. I think that we're only going to continue. So like gold is somehow will always be the safe haven. I think there was always a polarizing debate on Bitcoin versus gold. I think now that lens has kind of morphed into why not both? And
Yeah.
it's clearly working now all of a sudden because spoiler alert, the world is not zero sum. It rarely is zero
Yeah.
sum. So I think now that gold has kind of had that crypto anchor attached to it in the past, now it's finally relieved of it. So now it can really shine, pun intended, with the reason why they should succeed. And it's just the midterms are coming up, geopolitical tensions, inflation, government shutdown. Every month, you guys all hear it or see it in the headlines. Like things are just getting worse and worse, and people don't think that way because they assign the stock market to reality when
Yeah.
they're so disconnected. Like it's not the same thing.
Yeah.
Gold is just probably going to continue up to the rights until I don't even know what would stop stop like the world from returning back towards the mean, like in the 90s or
Oh yeah,
70s.
well it's done. We're cooked. And the gold is interesting because I think about I want like an investigative journalist to find somebody that's living in Idaho in a bunker that has been sitting on so much gold since like the 80s. Like I want to know who this person is. I want to know like what they think. I want to meet this person because they exist. And it also got me thinking of we never went to Fort Knox to see if the gold was there. We just kind of let that go. I thought we were going to do the big kick down the door, John Tapper, shut it down. Let's find the gold. We never went to Fort Knox. But maybe now that it continues to rise in value, we'll remember we need to go check on that situation.
I mean, Ron Swanson's a millionaire. I could tell you that.
Wait, Ron Swanson from Parks and Rec?
Yeah.
Oh my God, it's such a good character.
One of my favorites. Yeah.
Genius to put in like an anti-government person working in a local bureaucracy. It's so good. That show is so good. Let's way different than gold. Let's turn back to meme stocks because Roundhill just made an interesting announcement. Roundhill's a thematic ETF issuer. They've had some interesting ones over time. I think a few years ago they had a metaverse ETF. They have a lot of different ETFs that you can choose from. They're launching one that's basically just stocks that retail investors love. So it is the meme stock ETF. The ticker is meme, which is a great get. Fun fact about these guys, they actually had the Meta ticker before Meta for their metaverse ETF, and they sold it to Meta. And I would love to know how much they sold it for. But in this one, you've got, and well, let's go into like what's the factors. So obviously individual investors representing a large share of the market, they want to account for that. They are citing potential outside opportunities, and they're also actively managed because as we all know, these are rotational. You're hot one day, you're not the next. As Taylor Swift says, you're only as hot as your latest hit, baby. And let's look at what's in here, though. So we've got Open Door, obviously. Plug Power. Haven't heard of those guys in a minute, Shy. That's an odd one, right?
It's a fake company.
Okay. And we got Applied Digital, QuantumScape, QS, Cipher Mining. You've talked about that one, Shy, right? That's in your utility play.
Yeah, I mean, some commentary on these kind of ETFs. I think usually the portfolio managers or whoever orchestrates these ETFs are following a lagging sentiment indicator, and they don't realize what's the actual hot topic or where the bottleneck is or what is actually getting re-rated. It's just like Plug. Like, why is Plug 11% of this? Like that should no world should that be the case at all. Same with Bloom Energy. Like that should not be a top 8 position in a meme stock. Like it's not. It's like I know there's like guardrails on how you can get these ETFs approved by regulators, and you can't like have an over index on a specific theme. But this is not a good portfolio management skill. Just looking at this right now, I don't think it's going to be a good performer. I also think that when we do have a pullback, which we eventually will, having meme as the ticker popping up in all red makes you a joke, this ETF. So I think that it's questionable.
What about if they had like a 3x leveraged meme? That could be fun. That could be fun if you're a certain type of degen looking to play. The expense ratio is 0.69%, which I don't think is crazy for actively managed. But again, like this seems like, to your point, a lot of obvious ones. Like I wonder if we did a StockTwits trending ETF, how that would and plotted it. I wonder how that would line up. Maybe that's something we can do.
Yeah, I mean, I also don't know how often they rebalance this. Like, I don't know if this is a quarterly thing, monthly thing. You better hope it's more active than that if they have Plug at 11%. But yeah, I just think the 3X ones, ETFs, I think we're trending towards a world where naked calls won't be a thing anymore. I think a lot of retail don't understand the Greek behind the options contracts. So most of the time they actually do lose money on them. Now, if you want to like capitalize on a re-rating or the stock pull back to the 21 day EMA, like I want to play that bounce and I want more leverage to do so. Usually the route was a naked call or short dated puts. Like I think now these 3x leverage ETFs, like it's a good avenue now to not have to worry about your IV being drained due to expiration dates, or is this being priced correctly or is this incorrectly on the contract? Like I think it's a real world. I also think it's please don't view these vehicles as long-term positions. That's the biggest thing, because
Yeah. Don't
as
sit in one of those and kick back,
don't
right?
my biggest early career mistake, like when I was 19, guys, like was I'm freaking bullish on gold. Clearly I should have probably stuck with that and
Yeah,
forgot the
damn.
growth investor route I went. But like I bought nuggets, a leverage tool for gold. I did not understand what that truly meant at the time when gold had a massive pullback on something macro, and I was just like, what do you mean I'm down 30% all of a sudden? What is happening here? And it was just, yeah, it's tricky. It's very tricky. Good learning lesson
Yeah,
for me.
I've heard people being like, "Yeah, I'm in that." I'm like, "For how long?" Because you're not supposed to just like set it and forget it with those.
You can't.
But the education is key, and if you see all these ETF issuers, they're very trying to educate people as part of their marketing, which is probably the only way they can really market these things is through education and not sort of pushing things. But there's always a lot of great resources on these ETF websites. Not to, not as interesting as Love Is Blind with a blind cast member, not as interesting as the Yankees coming back, but check out these ETF websites because they actually have some good content on there if you want to understand these vehicles a bit better. Shy, relevant to your interests, Jensen Huang was just on Squawk Box this morning, and he says that demand is up bigly this year. And in the last 6 months, quote, demand of computing has gone up substantially. Seems like an obvious statement. You've been talking about compute a lot. I guess while we zoom out, because we talk about this a lot, compute specifically, can you just like define that and also add a little color to what Jensen's saying here? Like what's causing that? Is this an obvious statement, etc.?
Well, I also think it's really interesting the timing of Jensen's interview. Like right, I think like 5 a.m. the following day after that.
Yeah.
Actually, it was the following day. It was just 2 days later after the AMD news. I think it's, or so answer your first question. Sorry, I should have compute. What is compute, especially AI compute? It's just, I don't know, the fuel or the computing power required to train and run an AI model. That's
Yep.
really all it is. So, if you want to think about AI models as a car, like compute is just the fuel for your engine in your car. That's
Got it.
essentially it's raw horsepower. So I think that's clearly we are actually the AI workloads are only scaling up, and that's the beauty of them. Like it's not a flip of a switch. Like it incrementally adds day after day after day all the compute that's required. It's just like data. Like the amount of data that gets generated incrementally adds every single time you use it. So I think right now it's only going to exponentially compound at a pretty rapid pace. I think some of the comments that Jensen said this morning was really interesting. I agree absolutely on the relationship with China, how in the AI lens, how we compete against them. They are so far ahead in the energy space
Oh, did
on
he say
AI.
that in the interview?
He said that in the interview, but
Ooh.
we're way ahead on the chip space. I think that's a
Okay.
very accurate statement of like,
You
that's
said
why,
that like a week ago.
yeah,
You literally
that's what's
said it.
happening. Yeah,
Okay.
must be watching the show. But
Clearly.
no, that's why like China isn't so far behind us in the AI race, because like they are kind of tackling it in the opposite equation. Like they are trying to tackle the energy part because they know that is going to be a bottleneck eventually. So they want to have all the resources necessary. The model part, I think they're banking on the democratization of a commodity product will catch up, so they can just leverage and I want to say steal, but do the China way, which is replicate an IP and dumb it down a bit that makes them scale it quickly. So I
Mhm.
think that might work actually to become more competitive with US. But again, Jensen is our savior. If we didn't have him, I'd be much more worried about this AI race. Some other comments he mentioned, I don't know if I believe it too much, was he was caught off guard with the AMD news with OpenAI. He's like, he heard about
Oh,
it after it got released. That's not how
that
the
seems nuts.
that's not how the industry typically works in that space. So I think that maybe I don't know why he said that, but I don't believe that as much.
Oh, interesting. Okay.
Another one, he was just like, oh, he regrets not investing in OpenAI early on because he thinks they're gonna be $1 trillion company. His favorite recent investment is CoreWeave. He wants to be more active in investing in startups. Again, I think we haven't touched on this yet, but like I think we're entering a really interesting world of what new capitalism is. I
Mhm.
think that clearly there is a GPU economy forming. I think that by what I mean by that is there's a new financing model that's being created in the GPU buildouts right now because everyone needs GPUs right now. They need the tools in order to capitalize on AI. And it's not just right now, all the top earners, aka the hyperscalers, are using it, but eventually everyone else will need to use it as well, especially the AI native companies. They don't have the luxury of printing billions of cash on the bottom line. So what do? They're going to start having their funding on these raises tied straight to the hardware because guess what? XAI, for example, yesterday, NVIDIA, I think got a $2 billion stake in XAI. Why is that? Well, that was a financial engineering route for XAI to, well, the cash we're raising right now, we're going to be buying NVIDIA GPUs. So rather than buying a depreciating asset of hardware right off the gates and affects our balance sheet, let's just have this arrangement with NVIDIA a bit where we can like have the lenders seize the GPUs in case we can't deliver on our loan rather than actually hold our balance sheet hostage. And now you're seeing lenders become more willing to do that because NVIDIA chips are turning to their own asset class. Like it's
Yeah.
just as good as cash. And I think that they know that they can flip it in the secondary markets if something goes balloons up. So I was gonna say tits up, but I don't know if that's
Well, it's
cautious.
too
But
late now.
oh yeah, you're right. You're right.
It's fine.
So-
This is okay. If your kids are watching this show, what are you doing? They should be in school. They should be out for a walk, walking the dog, doing chores, maybe watching Miss Rachel. They shouldn't be watching this. It's too early for capitalism for some kids, I think. That's a hot take I have. I don't think babies should be taught how to invest, but that's what we're doing. I understand financial literacy. Um, we can say whatever we want on this show, though, Shy. We're not, the FCC does not, there's no jurisdiction here. I don't think. Maybe there is. Let's talk about your boys at ASTS, though.
I'm looking right now at it.
Let's
This is
talk about it.
bonkers.
So Verizon signed a deal with them. They just got a new CEO like yesterday. So moves are being made.
Oh yeah, the
Uh,
PayPal one.
Yeah, PayPal Mafia. So the deal is going to bring cell service from space. Sounds familiar. What do you make of this?
Sorry, I'm just looking to see his price action. I mean, this has always been the case for ASTS. Like ASTS is not trying to compete with these telecom providers. Like that's what Starlink is actually trying to make these Verizon, AT&T, all these companies obsolete. Like they truly are trying to replace them. ASTS is just an added layer to all these telecom providers to kind of be able to actually operate in the new digital economy. Like they aren't able to without ASTS's help. So Bloomberg's 6 was a huge thing that happened last week. They had a $800 million offering yesterday that spooked a lot of people, but guess what? It turned green for the day. And now this news, like I think that it's kind of crazy because they're a $25 billion company right now. But I don't. This is like I think space again. Like you're seeing Rock Labs also up 11%. So that's what I was like watching right now. Like why
Today
they're
they
up
are?
11. They are, yeah. So I think the whole space bucket as a theme is just getting re-rated because you're seeing these deals actually show that the reality is a lot closer than people anticipate. And it's a multi-trillion-dollar economy that these companies right here, if they succeed in what they're trying to accomplish, it's going to be much bigger,
Yeah.
bigger. Like they have a first mover advantage. Like I just think that being like the space theme, it's a great case study on trying to target early disruptors who have a moat, disruptive IP and some kind of network effect that the theme has plenty of runway that it will just high tide resolve boats eventually as more sovereignty funds go towards the space, and as there's the space matures, like it's just gonna carry these companies with it, and that's what you're seeing right now. Like it's not just these two companies. Planet Labs is doing really well as well. Like I think they're killing it, but it's kind of crazy. Like 25% of my small cap portfolio is in ASTS and Rock Lab, so that's what I was like
Whoa.
watching right now. On do I trim or not? Because now I'm up 1,000% on Rock Lab. I'm up 300% on ASTS. I think things are, like I mentioned in the comment earlier, like the when is usually mispriced. It's usually way too aggressive. So like at this stage, like I don't know, maybe is a space theme bucket getting re-rated too aggressive too quickly, and earnings will be a sober reminder of like we're still kind of far away, guys. But also like I don't know, I was right. My thesis was right. So why would I, now that it's being validated by the market, why would I start pulling some funds out when I'm right now about it? So I'll let it run. So knowing it'll pull back eventually, which it will, because the daily RSI is like an 85. It's overbought, overextended, but wow, crazy times.
Yeah, I mean, is ASTS better performing than Jumia?
Yes, yeah.
Oh wow.
Definitely.
Okay.
Definitely is, which is
also, guys, I gotta say, this is freaking gross. I've been suffering. I'm gonna go back and watch this episode because I've just been like making faces. It's just not. I'm trying to like drink around the protein now, but it's all congealed. It's just, I'm not shorting Starbucks, but I'm not shorting Starbucks. No offense to Starbucks.
They tried.
It is like a good job, good effort. I don't know. I think this new guy's just in there just like throwing whatever at the wall. Like, I don't know. How about like clean the bathroom? That's starting place number one. I think the greatest thing about Starbucks was the ease of use of their mobile app. They were the first to have an amazing mobile app. They were one of the first QSR companies to have an insane mobile app. I was using them so much in COVID, just like ordering it, picking up, ordering, pick it up. And now they're like, we want people to hang out here again. It's like, I don't know. You got to make some upgrades if you're going to do that.
I don't know.
I don't know if I'm going to hang out at Starbucks. You took away all the tables. There's no outlets. There's no chargers. It's like the Wild West. I'm fighting for my life every time I'm there. So anyway, we'll give them another shot. Maybe there's like one of those like Fresca things I can try.
Well, no, they're gonna have to acquire. They're gonna.
What do you think they're gonna acquire?
I don't know, like the Alfreds of the world, for example,
Dutch Bros.
Or Dutch Bros. Like that demographic loves Dutch Bros. Like it's great. It's great. It's just sugar drinks, but I think they're in that world where their brand is not damaged, but it's just watered down.
It's too saturated. Remember when it was a flex to have a Starbucks cup? That used to be, and now it's kind of like I'm walking down the street, people are like, "What are you drinking?" I'm like, "Good question."
It's like Nike. That's what Nike is now. Like,
oh, you think Nike's that bad?
Yeah, Nike Zoom shoes are like, or Nike, like their swag, like it's not the same as it was like 10 years ago. Like that's the thing. Like these blue chip brands just didn't innovate at all, and they were staying in their comfort circle for way too long. And that's a fickle thing in the consumer space. So I think that's another to be honest, like Dutch Bros is something I'd invest in more than Starbucks, because anecdotally, every time I go by it, it's fat lines, and they have so many locations they can like go into.
We don't have those here. It is interesting to see the rotation of what brands are popular, because I think I mentioned I ran a race two weekends ago, and I was just looking down at everyone's shoes, because when I started running years and years ago, everyone had Nikes or New Balance. Everybody had Hokas. Literally I was like, weird not to have a Hoka. My New Balances are like chunkier to look like Hokas, but they're New Balances. And it's just weird, you're on top until you're not. But literally everyone was wearing Hoka sneakers. I couldn't believe it. And it was the first time I really was like, damn, Hoka. On running, not as much. Those are not comfortable though. What are you looking at here? Is this Dutch Bros? Oh, Deckers is the parent company. Okay.
I actually think Hokas are pulling back a bit on like LA sentiment, for example. Okay. I think they're too boomers or too. It's just like that demo.
New
Um,
Balance, though. I mean,
is the
they
renaissance of New Balance is
Josh
crazy.
Allen. Dude, Josh Allen is getting his bag. He does New Balance. He's the pistachios guy. He's literally the guy marketing pistachios. The entire nut is him. That came off so weird. I can't believe I just said that. Guys, we're having a weird morning. So I was a little late coming into the show because two gentlemen in my co-working space were in a physical altercation. And I was like those like meme videos of like the old Italian people that are like they're screaming on the street. And I was like had my phone out and I don't know, Shy, like it was two co-founders and something about like someone asked for something that was just out of pocket or like it had to be over money. But one stormed out and it was like, pack your shit, lock the door. And then I heard like a body like hit the glass. And I was like, oh my God.
What
And
you know what it was? They're probably discussing if AI is in a bubble or not.
yeah, they're like on two ends of the quantum debate. They're just like, too early for this. Wait, but the funny thing is like they're all like there's mostly dudes in my office. There's like one other woman and she just like peeks out and looks at me and we're like, oh my God. Because it's like women are too
Boys.
emotional to lead. And this guy's like his like ties off and he's like rolling down the I don't know. I'll update you guys on this though, because like I'm like, damn, what's going on here? I have audio, but I'm not gonna, I was gonna play it for you guys, but I'm like, I don't want to get whenever people share things online now, people are like, can you not can you not record everything in public? But I didn't record their faces. I just got the sound because the argument was so funny. And I gotta say, one of them stormed out. And then before I went to go pick up my coffee, the other one was kind of like crying. And so I feel bad. So do you and Daniel ever get into tiffs like that, Shy?
Do you see Daniel? He's a freaking machine. No way. He
That's
would
why he's
break me
lifting all the
apart.
time. That's why he's lifting all the
No.
time.
I think no, we definitely don't. I think
He's good. You guys
I,
work it out like adults.
I would run so fast if he ever confronted me like that. Those people at your office, like you guys haven't seen him in person. A guy could be a NFL linebacker right now if you wanted
Oh,
to be
well, I've
crazy.
seen the content. He's like Iron Man. The funny thing about these guys is one of those guys has those, those standing desk things for balance. So I'm like picturing him like screaming at the other guy as he's like doing his core workout. We'll keep you posted though. I don't know what this company. I think they do like real estate or something, but that was very exciting, and that was maybe the most exciting thing that's happened to me this week outside of Aaron Judge and Love Is Blind, which everyone needs to go watch. Let's check in real quick with the markets. The Dow Jones is down slightly. S&P is in the green. Nasdaq in the green as well. Stocks ticking slightly higher this morning, led by NVIDIA. It's one of those weeks, Shy. We're just like, let's just see what happens. You mentioned you're in the lab. I'm recording people getting into altercations in my co-working space. We should just enjoy that it's pretty calm right now, given everything going on. So rest of the week, tomorrow's Thursday. Anything you're looking forward to? Anything new and different? Are you still, you're still doing your research? You're still not confronting Daniel physically? What's going on over there?
Yeah, I mean, this is crazy times. Like again, like my small cap portfolio is just going bonkers. I think I don't know what to do. Like right now, it's just seeing crazy moves day after day. And I remember a feeling I had last week where I was up 6% just in a week. I felt like I was lagging. I felt FOMO still. So I think that was crazy to feel like
Yeah.
I'm not. I feel like I should be doing more when I made 6% in 1 week. Like I just think that we're in times right now that everything's getting re-rated, especially speculative growth themes. I think that I don't want to raise cash because guess what? What am I going to do with that cash? Like there isn't that many assets right now that I feel like I should be buying. I would love it if AI utility themes like the Nebuses, the Irons, the Ciphers actually pull back. That's one. Like that is one theme that I will go so hard on whenever we do get any kind of macro pullback
And that's
in.
only going to happen if the whole thing goes right. What would possibly just make those guys?
Well, stupid information articles like yesterday saying Oracle is losing $100 million by renting out their NVIDIA chips. That
Okay.
type of ridiculous statement can cause some FUD spreading potentially.
Okay.
That makes these like neo clouds and AI utility names like, oh, maybe it's not as profitable or hot as I anticipate, because nobody these deals, like these are all revenue deals that these companies are getting. Nobody really knows the margin profile yet. It's kind of a bit vague, and that's fine because we're so early in it that maybe there's some like negative margin FUD that can hit the space and cause it to pull back. But again, like what new variable is going to hit the newswire to stop this rally? It's just going to be AI.
Yeah.
Like that one Oracle article caused the market to pull back 0.5%, I think, essentially within a minute. That
Whoa.
shows like this is an AI trade rally. Like
Yeah.
this is purely it. So if the only thing to stop this rally and to bucket is some kind of AI headline, and spoiler alert, like the AI build out is only going to continue. You can't turn off the AI investments switch as easy as you think. So like,
Yeah.
just enjoy the times.
Yeah, stay
I
grounded.
Yeah,
Go
stay
go read
grounded.
about the Black Friday. Go watch a Ken Burns documentary about the Dust Bowl. We're in boom times. And like I say, 6% ain't so bad, but we it's October over here. So we'll be back tomorrow, first thing in the morning, probably fresh off another Yankees win, hopefully. And hopefully no one's fighting tomorrow. We'll see. We'll update you guys and we'll have some more news you can use then. Thank you, everyone, for tuning in as always, and we will see you next